very good morning to you and welcome to the Morning Outlook Report. I'm Rachel Jones reporting live from 𝐊𝐶 TV studios in Sydney. Now, the Australian share market looks set to fall at the open this morning as iron ore continues to be choppy. Yesterday, the market lost ground for the first time this week, with the ASX 200 finishing 18.3 points lower. While the market bounced off yesterday's morning's low, it failed to push higher due to losses from gold and iron ore miners, tech stocks, supermarket chains and property companies. The market has been somewhat directionless so far this month. Commodity prices were mixed overnight. Iron ore stood out with a 4.8% lift. However, this comes after a 9.3% tumble a day earlier. The iron ore price has fallen by more than 40% from the mid-May high. This is mainly due to concerns China is cutting its steel production targets. Oil slipped by 1.4% and gold fell by close to 2%. Mining stocks remain some of the hardest hit, particularly gold miners like Northern Star Resources, Newcrest Mining and Evolution Mining. BHP continued to come under pressure after trading ex-dividend last Thursday. Over 15 companies traded ex-dividend yesterday, included Bramble, Medibank, Blackmore, Adairs, Shaver Shop, Accent and Austell. Most lost ground. 9 companies are going ex-dividend today, including South32, Promedicus, Altium, 𝐊𝐶 and the Australian Finance Group. 6 billion shares were traded yesterday, worth a heavy $8.9 billion. 597 stocks rose, 836 fell, 407 finished unchanged. Now, New South Wales businesses will find out if they can reopen today as Premier Gladys Berejiklian unveils the much-anticipated roadmap out of lockdown, with some regional areas to be released from this weekend. There will be rules for places of worship, weddings and sporting events. Meanwhile, Victoria has recorded its most COVID cases since mid-August last year, hours before regional Victoria is released from lockdown. 324 new cases have been reported, with many unlinked cases. Moving on to company news now. Synlait Milk has confirmed the sale and leaseback of its Synlait Auckland premises that forms part of the company's North Island manufacturing network, providing additional blending and canning capacity, also warehousing and office space. The sale price is $30.5 million. When Synlait acquired the land and buildings back in May 2017, they were valued at $12.4 million. Settlement will take place on the 4th of October. And Gold Road Resources released their half-year results this morning, showing revenue from gold sales hit $129.6 million, compared to $135.1 million back in June 2020. 3-year production outlook shows a 35% to 50% increase in annual production to a sustainable 350,000 ounces per year by 2023. That's supported by renewable energy power upgrade. Progress also continues towards an updated Gruyere oil reserve. That's expected in the second half of 2021. They noted a fully franked dividend of 0.5 cents per share. Macquarie stood out on yesterday, lifting by close to 5% after delivering a trading update. The investment bank says that thanks to favourable market conditions, it expects its half profit to close to double from last year. Shares in logistics group Qube rose by 4.6% after paying $90 million to buy export grain facility Newcastle Agri Terminal. Qube expects the acquisition to help provide additional geographical diversity. Now it's time for a very short break. Stay with us for more news affecting the markets today.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐊𝐶 TV.
Welcome back. I'm Rachel and you're watching the Market Outlook Report. Over in the US, share markets retreated yesterday as investors reassess valuations amid rising economic risks, including the reduction in central bank stimulus. Shares of Apple and Facebook both fell slightly after helping push the Nasdaq index to record highs in the previous session. PayPal shares dropped 2.7% after acquiring Japanese buy now pay later firm Paidy for $2.7 billion. Shares of Coinbase slid 3.2% on regulatory concerns. The Dow Jones index fell by 69 points. The S&P 500 index lost 0.1% and the Nasdaq index dropped 88 points. The US Federal Reserve Beige Book noted a downshift in US economic activity to a moderate pace. Inflation was characterized as steady at an elevated pace. European share markets fell on Wednesday, a day before the European Central Bank meeting. The Pan-European Stock 600 index shed 1.1%, with automobile stocks down 2.2%. The German DAX index slid 1.5% and the UK FTSE index lost 0.8%. London-listed shares in Rio Tinto and BHP both fell. Longer-dated US Treasury yields fell yesterday after the US Treasury sold $38 billion of 10-year notes at a yield of 1.338% into strong demand. US 10-year yields fell by 3 points and 2-year yields were steady at near 0.22%. Major currencies were mixed against the US dollar in European and US trade. The euro fell to near 1.182 US dollars at the US close. And the Aussie dollar was near 73.65 US cents at the US close. The Japanese yen was near 110.25 at the close. Global oil prices climbed over 1% on Wednesday as US Gulf of Mexico producers made slow progress in restoring output after Hurricane Ida. Just over 20% of oil and natural gas production is back online, according to the US Bureau of Safety and Environmental Enforcement. The Brent crude price rose by 91 cents to $72.60 a barrel, and the US NYMEX crude price added 95 cents to $69.30 a barrel. Base metal prices were mixed on Wednesday. Aluminium hit a 13-year high on Guinea supply concerns. Nickel and tin both rose, but copper fell by 1.1%. The gold futures price fell by $5 an ounce, while spot gold was trading near $1,789 US dollars an ounce at the US close. Iron ore slid $4.80 a tonne. That's all for the Morning Outlook Report this morning here on 𝐊𝐴𝐚 TV. Have a great day trading. Stay tuned for more market updates and economic news live throughout the day. This is Rachel signing off for now.